Welcome back to Robinhood Stock Market Watchlist Group. My name is Carlos. Today is Sunday, August 28th, and we are going to go over lots of good stuff. We have a meeting every Sunday morning. I'd like to go over some either educational stuff, but also always plan ahead to the week, making sure we are aware of what's going to happen before it happens. But first, let's go over some educational stuff. Something that we like to do because the more we learn, the more that we're going to earn. And I used to have a little image that would talk about trading rules. However, that image definitely got obsolete, and so I just quickly kind of recreated and updated some rules right here. Starting with the first one is definitely call it the ABS rule. Rule number one, always be straddling both calls and puts, especially with the type of economy that we're in, when the market could surge 5% one day and it can plunge 5% the next day. There's a lot of different ways to trade in that kind of style, but it really requires a tremendous amount of experience and a lot of different strategies and stuff. But for the majority of traders, it just doesn't work. So straddling is when we are betting. We're betting the stock goes up and down at the same time. If you're not familiar with options, a call is to bet a stock goes up, while a put is to bet a stock goes down. Most traders, I'd say 99%, once they're in the stock options segment of it, that they believe that they can only pick one direction or the other. And they feel, and I did too, we felt like it was a conflict, that you can't just bet a stock goes up and down when really you can. And so the beauty of that, when you're straddling both calls and puts especially on a very volatile day, is that you can only lose what you have in one hand, but your gains in the other hand are potentially unlimited. And so in a worst case scenario, on a very volatile day, you could lose 100% in one hand, but your gains in the other hand could be 200%, could be 500%, it could even be in the thousands of percents. And that's huge. And I'll show you an example here really quick. I'm going to we'll just kind of I'm going to upload a picture to the chat room really quick and kind of show you an example using a screenshot from Friday's options activity, and this is on AMD. So AMD on Friday closed at $91.18. It was down 6%. So again, a call is to bet a stock goes up, and a put is to bet against the stock, betting it goes down. So if we had, let's say we just chose around the share price, $95, whether it be a put or a call or whatever, just randomly picked it. But we can see that that you would have lost 100% on the call, but you just gained 700% of your put. So the gains outwash the loss and puts you ahead. Hold on here. Other people are still entering. I have to mute their mic. It's one of the glitches that we're trying to fix. So, but you can kind of see where we're getting at, especially if you don't know which direction the market's going, whether it be going up or down. There's just so much manipulation. There's a lot of events, interest rate hikes and recessions. I mean, there's just so much, then we got wars and in other countries. I mean, there's just a lot going on, which we'll go over here in a bit, but a lot of times this is just too much for a lot of people. And so going back to the rules. So again, rule number one, ABS, always be straddling both calls and puts. Rule number two, buy 10 minutes before close of your calls and puts, your straddling, at the latest. Buy 10 minutes before close and sell within 1 hour after opening, and repeat the same process on a daily basis. And when we're doing this is considered a swing trade. Everybody has unlimited of these no matter what. But when we buy 10 minutes before close and then sell the next day, it's like it's like day trading, because when you're buying right before close, you're eliminating all that time decay throughout the middle of the day. And so that way, when you're buying 10 minutes before close, most likely you don't really have much of a gain or loss on your straddle yet. And if you do, it's going to be an even amount, because you may lose a little bit on one, but you're going to gain a little bit on the others. So it'll keep things even for the most part. Going into the next day, preferably trading a very volatile day, there'll be some big, huge movements during opening. And I'll show you more of that here in just a little bit. Rule number 3, always have a minimum limit on volume, price, and percentage change. So for example, volume, and it doesn't matter if it's volume on shares or stock options, because if you don't have any volume on a share, it's not going to move very much. It's not going to be very volatile. You're just holding on to it, and because you're just holding it, and it's not really going to do anything. It may move a little bit up or down, but not a lot. But unless you know for sure something's going to happen, in the near future, hopefully, preferably not a hype stock or manipulated stock, but something more, like for example, like the whole charging infrastructure for electric vehicles. And if you found something that was, could possibly get more involved in something like that's inevitable, it's going to happen, that makes more sense. Or maybe cannabis stocks or something, that's inevitable that it will be legalized in the United States, something like that, but always have some kind of limit. Like for example, 1 million in daily volume. For shares, for stock options, maybe it's at least 1,000 or 10,000 in daily volume. Or maybe you want to look at, some other certain things, especially like price, like for example, you don't really want to hold a share that's under $1. If you're holding a share that's under $1, technically they're in violation of the stock market rules and could get penalized. They could get delisted, or they will have to go through a reverse split, just that way they can buy some time. So I definitely don't recommend anything under $1, at least $1 or more. If you're in the stock options, I would definitely recommend shares at least like $20 or $50 or more. $20, that's a pretty good. Any less than that, like less than $10, they can depreciate quite a bit, and that's why you just don't want to hold that kind of stuff. Percentage change, that can kind of go with trending directions. If it starts to go up, a certain percentage, then that means it's going, and it could keep going more that particular direction, whether it be going up or down. Rule number 4, trade stocks with news, press release, economic reports, earnings, etc., etc. That's just where it's really going to provide a lot of volatility, big movements, and that's what we're looking for. That way we can kind of get in and get out, secure our gains, and repeat the process. Whether if you want to trade the same stock over and over again or looking for different ones, these are huge. These are key for these big movements. That way we're not just holding on to something that's not moving and waiting for time, weeks or months. Time is money. When you can make money every single day by utilizing these rules. And so rule number 5, volume of the day and high market capitalization stocks. So volume of the day, this is kind of there's another rule that we say is always follow the money. So I'm going to type that in here. always follow the money. And we'll talk more about that as we dive into activity. That way you have a better idea of how to follow the money based on volume of the day and high market capitalization stocks. There are certain stocks that a lot of you have seen, like Apple, for example, or Tesla, Amazon, that are always on the top of the list because they're the most favorable stocks to a day trade and a swing trade for several reasons. It could be that they're very predictable. They can move very slowly, and they provide a very good amount of buying and selling signals that is very identifiable. And so rule number 6, always use moving averages for your buying and selling signals. That is absolutely huge and critical. And if you're not sure what that is, if you're new to this, I'm going to upload another screenshot for your reference here. So, give me a moment here while I do that. But and if you're just using the Robinhood app, which is a very good, great, powerful tool to use, but it does lack certain features like moving averages that's critical to use. And so, but it's great to pair a couple different programs together, like Robinhood, and I also use Webull for a lot of the tools that are missing in the Robinhood application. So this is our moving averages. The price line are these candlesticks here. So the price line goes down, then it comes up. The moving average line is the white line. And then so when the price line cuts through the moving average line, that is your little crossover signal, and that is when it's trying to let you know of a trending direction or a possible trending direction. There are what's called false signals, which could be due to certain things, but also your settings for your graph. And that's why you want to try to fine tune it the best you can, so that way you can eliminate as many false signals as you can and get more real signals. That way it can tell you when to buy and when to sell. And then so always use moving averages for your buying and selling signals. If you're not using moving averages, it's like throwing money at something and hoping that it sticks. And that's exactly what you're doing, is using the hope system if you're not using the system at all. So rule number 7, always use the limit buy and the limit sell. Now it defaults to that when you're doing options, but when you're buying shares, a lot of times it wants to do the market buy and the market sell by default, and that is a big no-no unless you're just trying to quickly buy. Because if you buy something using a market buy, it may buy at a higher price than you intended, because it's just trying to do it really quick, and no matter what, because you're telling the system, I don't care what price, I just want to buy it now, or I don't care what price to sell it at, just sell it right now. And it may sell it at a lower price than that you intended. So if you do a limit buy and a limit sell, you're telling the system that I want to buy at this price or lower, whichever is in my favor, or I want to sell it at this price or higher, whichever is in my favor. The disadvantage to a limit buy and a limit sell is that it might not execute immediately, because maybe the price has passed your limit price. And so in that case, it may or may not ever execute. So you may have to go back in there, you have to modify it, change it, and resubmit it. So the trick to try to get it to execute immediately when you're doing a limit buy is to change the price to maybe a couple pennies higher than what you would have, or if you're selling it, maybe sell it for a couple pennies less than what you would have normally done it. And this will kind of help, just in case, because when you're putting the settings in to buy or to sell, it takes a couple seconds, if not more. It just all depends on how savvy that you are. It could have taken you 5 seconds, 10 seconds, 20 seconds to put in all your settings and to send the order out. During that time, the price is changing, whether it be in your favor or not. And if it's not, you send the order out, it's just going to sit there. And so by adjusting the price a little bit will help execute the order immediately when you send it out. So rule number 8, beware of the false breakouts and the market manipulations. And so as we were talking about the false signals and the false breakouts, could be like bull traps or bear traps and whatnot, including market manipulations. Like for example, last week. So remember last week we were talking in our meeting about the Peloton. We had here. We'll go back here. Peloton. Let's see. We'll go back to our featured area. Peloton. We're talking about how Peloton in their earnings, they had a terrible earnings analysis before the earnings were even what was released. Remember, we were talking about how the company's earnings release had a 2% expecting an earnings beat. When we see something quite like that, we definitely have to be aware that manipulation could easily happen, because this is to be expected. 2% expecting an earnings beat, that means a 98% expecting an earnings miss. That's like a guarantee this thing's going down. So then all of a sudden they came out with this news about how Amazon, or well, we're going to sell Pelotons on Amazon. Well, they went up 20%, but look at this. Option traders originally were pricing in around a 20% price movement in either direction, but 98% it was going to go down 22% approximately, and it did. It went down 20 something percent right after it went up 20%. So I mean that was huge. They kind of did us a favor, because we knew that this was more likely going to go down. So all the puts were on discount, and we bought in and secured our gains the next time or the next day. And so but that's just kind of what I'm saying, is that just be aware of market manipulation, whether we are aware that it could happen here in the near future, or whether it's happening right now. These are just things that we all have to plan for. So if we plan our trades and trade our plan, that is just another important thing when it comes to trading stocks. And so again, that was rule number 8, be aware of the false breakouts and market manipulation. And then rule number 9, always have some kind of stop loss. Cut losses at a certain point, like for example, if you're down 10% or whatever, or you can always buy your costs lower. So that way, maybe if you're buying back in, it'd be negative 5%. If you know it's going to go a certain direction, do that, or ride winners at least 20% or more, but yeah, I mean these are just some really basic rules that are very, very important, and a lot of investors and traders will utilize these rules and then apply more to them, because every trader and investor specializes in something different, and so and they may need to have and apply different rules to this. So again, so this is really, really huge. This is our educational part of the meeting. So let's dive into the economics. Unless anybody has any questions about rules or anything. Any questions and anything about rules, or you guys got it down? Okay, I think we're good there. Okay, so we'll dive into the scheduled economic reports for this week. So economic reports have the biggest impact on the entire stock market system. So it only makes sense that we follow it. We know what's going to happen before it happens. Because when we were new, all we knew is one day the stock market is surging up or plunging down, and we're like, what is going on? Well, that's not good. We need to know what's going on before it happens. And so one of our rules, remember, always follow the money. So we have to follow how things work and move and where investors are pouring their money and stuff. So, and I used to try to find many different resources in different areas. And one of the neat things about me being the creator of our group, and I created it about 4 years ago, is I've been able to learn from everyone. Because like I said, everyone specializes in something different. So we all are together as a phenomenal team. So we've been able to find that the investing.com website has always been the best website for a lot of different things, whether it be US futures or economic reports. So on the front page, and this is also an application you can download from your app store. But on the front page of the website, there's economic calendar. But if you're on your app store, when you download investing.com, there should be a little calendar button on the bottom middle part of the app. You want to click on that. That's your calendar feature. And so, but there's a couple areas you can change it from: holiday calendar, earnings calendar, currency calendar, forex, and whatnot. But we want the economic calendar. So we'll scroll down. We want to click on filters. We want to clear everything because there's a lot of gibberish in there. So we want to click on clear. There's only two things that we need to see. We want to put a check mark under the United States right here. So, and then under importance right here, you will see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because we're telling the system that we want to pull everything that will have the biggest impact on the United States stock market system. So click apply. Now, when you do this on your mobile application, it should memorize your settings. But if you're doing it on the website, it won't memorize it. And it will base the time of everything in Eastern time versus your mobile device. It'll base the time on your time zone. So then we want to click for this week. That way we can see every scheduled economic report that'll have the biggest impact on the entire stock market system. So normally, when we're looking at this regularly on a daily and a weekly basis, you'll notice that usually most of the economic reports are on a Tuesday, Wednesday, and a Thursday. We don't normally see economic reports on a Monday or a Friday. However, on this case, we do see a few on Friday because this is going to be a busy week. But also know that the next following week, Monday is a holiday, and usually holiday weeks are very, very weird and are not, they don't normally have a lot of things scheduled. So the week after next could definitely be a very low volume, very low activity, very low volatility. But we'll get more into some other things later on, or we'll get more into some things that are happening for this month here in just a little bit. So Monday, a lot of people are like wondering what's Monday going to be like. A lot of people speculate that we could see a good recovery Monday or a continuation of a decline for Monday. Ultimately, when looking at the options activity, we're seeing 50-50. But technically, we should see, as long as there's no major, international issues throughout the weekend, especially with, China or Russia, we shouldn't really see anything bearish. Monday should be well Monday we've basically going into Monday we've had 2 days off, so we that way investors had time to relax. It's no different than like a halt or a circuit breaker, where it gives, where the stock market just freezes, or a stock, and it gives investors time to relax and to take a breather and inhale, exhale, type of thing. So I feel that this is kind of that scenario where we had a couple very bearish days, the last couple trading days. Monday should be a time where it can kind of inhale and to kind of relax, kind of stabilize, and whatnot. And ultimately, looking previously looking at the economic report, it looked pretty bullish to me. And that means that most of the days, at least the next few days, should be pretty bullish before it starts turning bearish again. And so, but we'll kind of go over this together. So that's kind of our thoughts on Monday, but ultimately Monday is really 50-50. When we're following the money, it seems like the majority have 50% of calls and 50% of puts. So and that's a good way to look at it. But going into Tuesday, August 30th, we have the CB Consumer Confidence Report. And so this report is scheduled to be released at 10 a.m. on Eastern time, which is 30 minutes after the stock market opens. So that's very important to know, because it's good to know whether it's going to affect the pre-market or is it going to affect after the market opens. And so, and if you're not sure what this consumer report is, feel free to click on it, and it'll provide you a little bit of a description of what it is and how it'll affect the market. Now, looking at these, when we're looking at basically, the more rare the report is, the more of an impact it'll have on the stock market. Just like what I was saying last meeting. We had a quarterly report last meeting, and as I mentioned, that the more rare that the economic report is, the more volatile that it'll provide the stock market. And so if it's a quarter report, it's a report that comes out only 3 months, that'll provide a massive amount of volatility. If it's a monthly report like these, that'll provide a good amount of volatility. If it's a weekly report like these that happen every week, it'll provide a fair amount of volatility. So, and these are our monthly reports, so it should provide a decent amount of volatility sometime after the stock market opens, 30 minutes after the stock market opens. So, and typically the first hour and the last hour of the day is the most volatile times of the day, and so this is just going to provide more volatility during that time. So if we click on CB Consumer Confidence Report for the month of August, it'll kind of provide us a little description right here of what it is and how it'll affect the stock market. For example, the CB means the Confidence Board. Consumer confidence measures the level of consumer confidence in the economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. Higher readings point to higher consumer optimism. So if a higher reading than expected reading should be taken as a positive or bullish for the US dollar or stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so the more that you look at this, the more likely that you will remember it, to the point where you won't ever need to really click on it ever again. And so but looking at these numbers, and these are very, very important. So the CB Consumer Confidence Report was previously at 95.7 during July. So this is the month before the month that we see here. So the forecast is expected to be higher at 97.5 for the month of August. So if investors in Wall Street see this, they're seeing this just like you are, okay? And so if they see that the forecast is expected to be higher than the previous, that is bullish. So that means that going into Tuesday, that we should be green. So that means, if you want to, and when we're straddling, just like we said, that is our number one rule. Always straddle both calls and puts. Now, but we can have a ratio. It doesn't always have to be 50-50, 50% calls, 50% puts. We can have a certain ratio like 60% calls, 40% puts. We just don't really want to go over that, because if we're wrong, that other side can help wash our loss on the other side. But if the difference is way off, like if you have 75% puts and 25% calls, and we go into Tuesday and it's green, you might not have enough calls to offset your puts, because you're too bearish. And so, but another rule as part of the number one, always straddle. Never have a call without a put. Never have a put without a call. Okay, make that a rule. Implement that. And make it a very, very strict. And so, but that's how most traders in Wall Street kind of anticipate this information, is based on the forecast. So same thing with the JOLTS job openings report for the month of July. It's higher than the previous. Now, if one was higher and one was lower, then we want to expect mixed signals, or maybe it's flat. Maybe there isn't going to be any movement because one's high, one's low. And so, but both of them are expected to be higher than the previous. Now, a lot of times, for example, if we see that both are forecast to be higher, but let's say one or both of them actually are lower than the forecast and lower than previous. Now, the market usually seems to still run off the forecast. They kind of sometimes ignore, whatever happened, and they just continue riding the wave of what we anticipated the forecast was going to be. Now, sometimes it could react differently, but sometimes it takes time, because this information is released almost precisely at this exact time. Now, when we're seeing this, so are the news companies, and it takes time for the news companies to create an article. It takes time to blast it out on the news or their news application, and when they're blasting it out on the news applications like Bloomberg or whatever, it goes out to millions of people. But it takes time to notify each it doesn't happen all at once. Each individual person gets notified all within milliseconds, but it takes time to reach those millions. And by that time, you may have gotten a news notification 5 minutes after the report's been out, or 30 minutes after, or an hour after. And so when we can figure all this out way before it even happens. And so, but yeah, just know the forecast part is very, very critical when it comes to doing our research and our due diligence. So Tuesday again looks bullish. So going into Wednesday, August 31st, the first economic report is at 8:15. So this is approximately 1 hour and 15 minutes before the stock market opens. That's kind of a weird number. We don't usually see this odd number here. It's usually a couple zeros or a 30. So this is interesting. So the ADP non-farm employment change for the month of June. So they are way behind on that one. So previous report though was 128,000 non-farm employment change, and so it is expected to be changed at up 200,000. So that is good. That is bullish. So, and knowing that this is going to affect pre-market during Wednesday morning. So, crude oil inventories, unlike most economic reports, there are a couple economic reports where we need the numbers down rather than up. So these reports would be the crude oil inventory levels and the initial jobless claims, which would be the unemployment report. These numbers we need down. If they're down, that's bullish. That's positive. So the crude oil inventory levels were pretty low last week, but I think they weren't as low as the previous week before. Let me click on it really quick and double check. Yeah, so the previous week was very low, and then it bounced back up, as we had mentioned that during our last meeting, but it was still so this should be the week where it should be less than this, and that should be bullish. And so let's go back here, take a look here. However, the forecast is saying the opposite. They're saying that crude oil inventory levels should keep going up. I don't believe that. I'm calling it bluff, because we are in that. So if you've been in our meeting before, I've always mentioned that when gas prices started to skyrocket, we started to notice a certain pattern with the oil inventory levels. Because most Americans get paid every 2 weeks, they normally are going to their least expensive gas station, and they're trying to fuel up, making it try to last for 2 weeks. So what we're seeing is 1 week the oil inventory levels are really, really down, and the next week they're up. But as gas prices have been kind of coming down a little bit, because oil prices were going down, they're not anymore, we may be seeing the oil inventory levels kind of starting to do a different pattern, but that's to be determined yet. It hasn't really changed the pattern, but the forecast is thinking that the algorithm could change now. but I don't think so yet. I still think that the fuel prices are still at a certain level where I think we're still seeing people fuel up every 2 weeks. So I believe that that the result should be a lot less than the previous report. So I'm still very bullish for Wednesday. However, if we want to focus more on the forecast part, then we want to look at it as mixed, because we have a bullish kind of a signal here, and we have a bearish signal here, because this is higher than the previous report, which is negative or bad or bearish. And so Wednesday could be mixed, but then again, we can see that the ADP non-farm employment change is happening during pre-market, where the crude oil inventories is released 1 hour after the stock market opens. So and again, the most of the activity and volatility is during the first hour and the last hour of the day. And so this is going to provide more momentum, hopefully bullish momentum, for a Wednesday 1 hour after the market opens. So going into Thursday is now, it's a new month, September 1st. We have the unemployment report that is released 1 hour before the stock market opens. The unemployment report was down a little bit last week. Surprisingly, it's been trickling up for months, but now it actually went down. However, the forecast is still thinking, oh, it's just a fluke. You know, it should keep going up. So, in that case, we should expect bearish characteristics for Thursday morning. So we've so far we should have 3 days this week of good bullish characteristics. Going into Thursday, looks like they're starting to kind of, you know, get a little, you know, bearish, because maybe things are really high. You know, we need stocks to start coming down before they kind of keep coming up. And so that may be kind of the algorithm that we're starting to see right here going into the week. And so but 30 minutes after the stock market opens, we have the ISM manufacturing report for the month of August. And this report is expected to be right around the same as the previous report. The previous report was 52.8, and it's still expected to kind of be the same, but even a little less. And so, but because it's expected to be less, again, traders and investors in Wall Street are anticipating that Thursday is going to be bearish. So we have two bearish reports that we're looking at right here. So Friday we have two economic reports that are scheduled to be released 1 hour before the stock market opens. So we're getting a little double whammy right here. The first one is the non-farm payroll report for the month of August. Now, the previous report was really good, you know, 528,000. Now it's expected to be a lot less, where the unemployment report rate for the month of August is expected to be the same, no difference. So that could be, you know, mixed signals, or maybe it could be flat. But overall, this is huge, you know. So if it kind of meets or you know beats that, you know, we could be, you know, we could have some kind of recovery. But normally, if it's less than this, you know, this is bearish. You know, this is just, you know, not looking good. And then going into a holiday week, there's going to be a 3-day weekend and then a 4-day trading week. So there's going to be a very low amount of volume going into that day. So, but definitely want to go over more schedules. You know, I don't usually like going too far into the month, but we'll go over it again in every meeting. But I want to let you guys know that September is the last month of our quarter, and there's a lot of events going on in September. More interest rate hikes. There's more federal meetings about that, but also this is the month where they should confirm that yes, we are in a recession, because the whole recession thing has just been kind of like a not like a myth or whatever, or it's just been kind of like they've just been putting it off. They haven't confirmed it yet because certain reports are delayed like 3 months, and so we need 2 consecutive quarters of a decline in economic growth. Well, this is the month where they'll say, okay, the second quarter was another decline. Okay, we are in a recession. You were right, and so that will help drastically lower the entire stock market system. So we have to really be focused on that stuff, and we will. So if we go to, there's the Federal Reserve.gov website, monetary policy. They have their own calendar, and it shows right here September 20th and 21st is when when the shit's gonna hit the fan, basically. But when it comes to economic reports and a lot of this stuff, they schedule things intentionally. For example, again, as I just mentioned, so the 20th, the 21st. So going into September, and it's also important as a pro trader that you always have a stock market calendar. In this case, I always use the NASDAQ trading calendar, and we're in 2021. It's imperative. That way we always know, again, what's going to happen before it happens. Like, for example, holidays. We're going into September 5th, exchange holiday. So, holiday. But look at this. We have a lot of events going on Friday the 16th. And the main thing I want to say about Friday the 16th is that it is called the Triple Witching Day. Triple Witching Day is a very rare day that only happens 4 times a year. And that is on the 3rd Friday at the end of every quarter, which is really in 3 more weeks. And so, but as I had mentioned, the Fed meetings and everything, where they're going to start talking about economic growth, declines, recessions, interest rate hikes, yada yada yada, is on the 20th and the 21st. The next several trading days after Triple Witching Day. This is going to be extremely bearish for all of these days. Very, very, a lot of volatility and everything. And it may also mean the end of our short-lived bullish season. Because again, the bullish season is during the summer season. That was July, August, and September. Our bearish season is during the winter season. That is January, February, and March. The months in between, those are our transitional periods of where we see a lot of volatility, but a lot of mixed signals, a lot of the previous season could be extended throughout that period for a little bit longer until the next season kind of kicks into gear. And so December, which is the last of another last quarter, or the last or the end of the year, we can see another trifecta on Friday 16th on that point, because that is really saying, okay, it's the end of the year, it's the end of the quarter, it's the end of everything. We are now in full bear mode at that point. Normally, I see that we're pretty much on full bear mode right during the Thanksgiving and the Christmas holiday, and so usually I would start switching, like if you have money market accounts, 401ks and whatnot, start going conservative on those, mid-November. But in this case, there's a lot of stuff that's a lot of bearish activity that is scheduled to happen for the next year. I mean, this is absolutely nuts. And so, but then we have to realize that Apple is going to be revealing their iPhone soon, very soon. I think here in the next couple weeks. And again, they could possibly surprise us with their electric vehicle, because Tim Cook had announced in January 2021 that they're getting in the car business, and they want to they want to have this vehicle out by 2024. So when you look at previous history with like Ford Motor Company or Tesla, what happens or how long does it take until they reveal the vehicle, until the customer gets the vehicle? It takes about 2 years. So this is 2022, so if they want to have this vehicle out by 2024, they have to reveal it this year. So it only makes sense that they could easily surprise us with an electric vehicle. And if they do, Apple stock can easily surge, it could skyrocket. And if it does, a lot of the rest of the stock market system could also do the same. However, I believe all of this is going to take place before our next triple witching day. Now, Tesla has their artificial intelligence day, part 2, on September 30th. So that is also going to provide a lot of more volatility to the stock market, especially with Tesla. It should rise because, as we talked about Tesla's split, a lot of their activity, we rode Tesla's wave up 2 weeks, about approximately 2 weeks before the split. Remember, I always say never hold any calls or puts through a split. But then we got to start riding puts down for about 2 weeks. So 2 weeks would be this week, this and that week, and then we anticipated that Tesla's stock should be around $240 a share, because that's down 20% from when it split. That's kind of the rule of thumb. Up 20%, down 20%, and then it should come back up 20% sometime before the artificial intelligence day. But normally, remember, one of our other rules is that I didn't write down is the always buy on rumor, sell on news. So the idea is to ride the wave before the event, and then the stock will usually go down after the event. And then we need to focus on puts for 2 weeks after that, and then calls 2 weeks after that. So, but we'll go over that again later on. But this is just letting you know what the plan is here in the near future. Let's see here. So the next thing that we need to go over is earnings. Earnings is very, very critical, as it has a big impact on the not on the entire stock market system, but it does have a big impact on segments of the stock market. Now, all of my posts I always save in our featured area of our group. That way it's there for my convenience and for yours. And so, but every Saturday I post the next following week's most anticipated earning releases. So that way you can see what stocks are scheduled to be released before the market opens and after the market closes. And so, but this week there's a lot of good stuff that's going to create a lot of volatility. And I always post the top 10's earnings analysis, and starting with ChargePoint. So we have recently seen, and we've talked about this before, how California has implemented deadlines by 2035. All new vehicles sold in that state is required to be electric vehicles. Well, we've also talked about how Hawaii have implemented this deadline, but also Washington State has also implemented this deadline. That's my state because I'm in the Seattle region. And so it's definitely something that I'm going to be affected by too, which is, no issues there. But the thing with this news is that now they're going to really partner up with companies like ChargePoint, Plug, and many others to build more of a charging station infrastructure, especially in like rest stops, rest areas along the highways. They don't even have those yet, but they're installing them. And so, but these are going to be in retail stores. I mean, they're everywhere. And so, but it's inevitable. It's just going to happen. And in ChargePoint, there's going to be a lot of news. A lot of people have this on their watch list. ChargePoint is going to be all over the media. And however, they're confirmed to release their earnings report on Tuesday after the stock market closes. The company's earning release has a 67% expecting an earnings beat now, because this is only from the previous quarter, which is not bad. 67% is right around average. Average is around 65, 67% anyways. Any less than that would be considered below average, or any more than that would be considered above average. So that's not bad, but it's not really, good either. However, option traders are pricing in around 11% price movement, when normally it averaged around 5%. So, but because of the recent news and everything, there's just going to be a lot more volume on this, because people are going to probably pump it up, because they know this is a very, very valuable company. And a picture can say 1,000 words, and that's one of the reasons why I post a picture, is because that way I can kind of explain a little bit about the company. And so CrowdStrike is, they're, a security software company. And so CrowdStrike is confirmed to release their earnings report on Tuesday after the stock market closes. The company's earning release has a 81% expecting an earnings beat, especially as inflation has gone up. Well, so has crime rate and cybersecurity. And with all the scammers and spammers and stuff, ransomware and stuff, these these are organized, scammers in like India, Nigeria, and so on, in these offices. It's like watching that movie, The Boiler Room. It is crazy, and it's all organized and everything. And they call, most of the time they call on Americans trying to scam them. And so, and I'm having to fight them in our group on a daily basis, every single hour. And so, security software is more important than ever before, and we can now see that because they should. This is huge. This is way above average. 81%. Option traders are pricing in almost a 10% price movement in either direction, where normally they've averaged around 6%. And so, but yeah, this is huge, and we can easily see, this kind of information just by reading this description. So Chewy, you can obviously see this is a pet food ordering website, and so Chewy is confirmed to release their earnings report on Tuesday after the stock market closes. The company's earning release has around a 49% expecting their earnings beat. Maybe it's just too expensive with gas prices, the way they are, being really high. So is maybe shipping costs, and so it might not be as economical to be ordering, even though it may be convenient, but it just might not be cost effective ordering online anymore. And so most people, we're seeing them going to Walmart. If you usually order online, people can, if they don't want to go in the retail store, they can always do that online order and do the curbside pickup feature. That way they never have to lay a foot in the store. Somebody will come out and they'll load your stuff for you in your trunk. Our option traders are pricing in around 13 or even a 14% price movement in either direction. And so obviously it's 50-50, maybe a good one to straddle. With knowing this amount of volatility, it might not be a bad idea to have both calls and puts on this one. Where normally, it's always been pretty volatile, but not quite as much as what's anticipated. So big lots. A lot of people like going there for savings, but again, a lot of people have been going to like places like Ross now, but like I said, most people are focused on Walmart for the majority, trying to just go on one place, one stop, one shop, and try to get the most bang for the buck. And so Big Lots is confirmed to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 20% expecting an earnings beat. That's absolutely terrible. And I believe it's the lowest percentage out of the top 10 analysis here. Option traders are pricing in around a 16 to 17% price movement in either direction, when normally they usually move around 5%. So investors are anticipating huge movements, and it looks like most likely in the downwards direction. Best Buy, probably not the probably about the same thing. I mean, with things being so expensive, you know, people can't afford to buy as many electronics now. I mean, this is not good for Best Buy. People are trying to focus on food, because when we go to the grocery store, when we're looking at the prices, all we can think about is how much inflation that has affected it. It's gone up at least 50%. Our grocery bill is 50% higher than what it was, and so and that's why you know, consumers are trying to limit their fund money and trying to make sure that they can cover their necessities. And so Best Buy is not a necessity store. And so Best Buy is confirmed to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 10% expecting an earnings beat. So this one is absolutely the lowest percentage. Now, we saw the same thing with Peloton, remember, right? So that could easily say, so if we know that this has a 90% expecting an earnings miss, and it should go down, option traders are pricing in around a 9% price movement. And again, this is on Tuesday before the stock market. So it only has 1 day to try to be manipulated. So it has 1 day for it to try to go up 10%, for it to only go down 10%. And that's why we want to try to buy right before the stock market closes, because you might not want to participate in that manipulation. We buy, and we can just, on this case, we can just buy puts, but we want to make sure that you are aware that this is still considered a lottery play. So lottery play means we put money into it, just like a lottery ticket, where if something happens and something doesn't work out, and we lose 100% of our money, but it's money that we're not going to miss. So you don't want to go heavy in that. The ones we go heavy in are the ones that are normally traded regularly. So this is not traded regularly. So if you get a lottery ticket, you know, you scratch it and you lose, you throw it in the garbage. It's money wasted. It's money that you're not going to worry about. So, but these are lottery tickets. So, but if you put money into it, you could potentially double it. You can also quadruple it, or if not more. I've seen where you guys have gained 4,000% just by doing this, and where if the stock, instead of it moving 10%, it moves 20, 30, 40%. That is a huge, that's a massive gain on our part. And so, but just realize that these are lottery plays, not to go heavy on. But like I said, they can still provide massive gains, just like a lottery ticket. And so, but yeah, it's not looking good for Best Buy, especially in the next year, because there's just a lot of stuff. A lot of bearish activity that's about to happen, and I'll show you what I mean. Give me a moment here, and that way I can upload it to the chat room here. That way I can display it here for you. Okay, so let me go. So I just uploaded it to the learning area. So this was, and so I just got this the other day. This is NASDAQ's forecast by the month. You know, going into the month after month, so August, so and then it's going into September. This is going down. Look at this. This is terrible. And you know, for 2023, I mean, everything in the closing, the price. I mean, this is like, oh my gosh, NASDAQ is scheduled to release or to touch almost $10,000, and it's at $12,000 now. And so that means it's down almost 20%. And that's and during August, and then after that we're starting to see. But think about this. So we knew everything that's going on with the interest rate hikes and the easing and everything and all that stuff. So So we know that we have another, a year and 3 months of interest rate hikes. But as we get closer towards the end of next year, we can see that all of a sudden that around towards the end of September, things should start coming up, because investors as well as ourselves can see the light at the end of the tunnel at that point. If we can see the light at the end of the tunnel, we know that they'll start easing interest rates, and they could easily start coming down. So if they start doing that, we get closer and closer towards the light at the end of the tunnel. Investors are going to start pumping things up, and the market's going to start coming up, because the stock market has a yearly cycle, and it has a 10-year cycle. We're just in this phase of that 10-year cycle where they're doing kind of what they're doing now, but this is kind of the schedule, looking at really deeper ahead in the future. That is what's about to happen, and then in 2024 we're going to see a massive bull season that's going to last a very, very long time, and very awaited. And so but so the bull season is really going to happen very early, and it's going to be huge. It's going to make a lot of money. And you can see, because we were not that long ago, we were at 13,000 for the NASDAQ. You can see that it's expected to get right back where it left off during June of 2024. So right in the beginning of our full-on bull mode and bull season. But again, this is all hypothetical. It's a forecast. But it's very, very realistic. So this is very, very important, and I did upload it to our little learning center chat room. That way it's there for your convenience. And so going up more with the earning releases, we have there's a couple of different Chinese companies that is expected to release their earnings. This is obviously one of those e-commerce platforms over there. They're expected to release their earnings report tomorrow morning before the stock market opens. They have about a 61% expecting an earnings beat. However, option traders are pricing in around 12% price movement, and it's done that before. It usually averages that in the past. This one here is China's version of like Google. So it's a search engine. They're expected to release their earnings report on Tuesday before the stock market opens. The company's earnings release has a 50% expecting an earnings beat. Option traders are pricing in around a 7% price movement, where before in the past it's moved around 5% average. Now Broadcom, as you can see, again, a picture says 1,000 words. They're part of the technology segment, microchips and networking. And so Broadcom is expected to release their earnings report Thursday after the stock market opens. The company's earnings release has a 71% expecting an earnings beat, so it is considered a little above average. Option traders are pricing in around a 5.5% price movement in either direction. So that's pretty good for them. And then this one here, they're expected to release their earnings report Monday morning, so tomorrow morning before the stock market opens. This company earnings release has a 77% expecting an earnings beat. Option traders are pricing in around a 7% price movement in either direction, where normally it's moved about half of that. This one here is they are expected to release their earnings on Tuesday morning before the stock market opens, and has a release has a 84% expecting an earnings beat. That is huge. Probably one of the largest percentages in the bullish side of it out of the entire list. Option traders are pricing in around a 12% price movement in either direction. And that's really good, where normally it's average around 5%. So this is really good way to maybe bet some calls on that one, puts on the other one, as a lottery play. So and normally when we do our due diligence like this, investing.com always posts a very, very important article every Sunday morning called the top 5 things to watch in the markets ahead. Because again, it's imperative to always know what's going to happen before it happens. And so and investing.com is just kind of helps us to make sure we don't miss anything. So with the Federal Reserve firmly committed to raising interest rates to tame inflation, even at the cost of a decline in economic growth, investors will be focusing on Friday's August jobs report for an indication of strength in the labor market. The United States equity market, investors will continue to reposition after Friday's steep sell-off, which erased all of August's modest gains. The Eurozone is to publish what will be closely watched inflation data, as the European Central Bank officials make the case for a big rate hike next month, meaning September. Meanwhile, the Chinese PMI data is expected to point to the ongoing weakness in the world's number in two economies. Here's what we need to know to start our week. The first one is the non-farm payrolls. And again, that was an economic report that we were focusing on. Or the final employment report before the Fed's September 20th and 21st meeting will be neatly anticipated by market watchers trying to figure out whether the central bank can pull off an economic slowdown without triggering a recession as it battles to tame inflation. The risk of a recession has increased as the Fed aggressively hikes rates, weighing on consumer demand and the housing market. The United States Central Bank has hiked its policy rate 225 basis points since March. That means 2.25% or 2.25% since March. While some areas of the economy are cooling, the labor market has so far remained robust. In July, the economy added 528,000 jobs, the biggest increase since February. Economists are however, a lot of jobs now are downsizing. We've seen in the last several months how a lot of them are trying to lower their staff, and so that means they're going to try to be more efficient. So that's when we're talking about with the jobs report how it's about 500,000. We should now expect 250,000, which is bearish. Economists are expecting the economy to have added 285,000 jobs for August. The unemployment rate is expected to hold steady at a 5-decade low of 3.5%, while average hourly earnings are forecast to increase solidly. That's why I don't think that the unemployment rate is going to really affect the stock market, because I think it's going to be about the same. And that's what the Wall Street and everybody else is anticipating. So we don't feel that is going to provide really any volatility to the market. But number two, other data. Ahead of the Friday's jobs data of the United States is set to release a report on the JOLTS job openings for the July on Tuesday, with economists expecting job openings to remain high, pointing towards still solid demand in the labor market. The newly revamped ADP non-farm payroll report, which covers private sector hiring, is due out on Wednesday and will include new data on the both unemployment and wage growth. This will be focused on, this will be followed on Thursday by the weekly figures on the initial jobless claims, or the unemployment report. The economic calendar also features the Institute of Supply Management's manufacturing index for the month of August, as well as an update on consumer confidence from the conference board. Number three is the stock market volatility, and that's definitely something that's been on our subject this meeting. Wall Street ended Friday with all three benchmarks down more than 3% as investors absorbed the Federal Chair Jerome Powell Jackson's whole speech. The S&P 500 was in a bear market after plunging in the first half of the year as investors priced an aggressive Fed rate hike, but the index has rebounded since June, recouping half of its losses for the year, because towards the end of June is the beginning of our bull season. But again, as we mentioned in our meeting here, we are approaching the end of our short-lived bull season. So, but it's getting pummeled. The rebound has been fueled by the combination of strong corporate earnings and optimism that inflation may have peaked, which would allow the Fed to slow rate hikes. Now, talking about the inflation have peaked, it may seem that way because the government has suspended temporarily the federal gas tax. Yeah, I know the gas tax isn't that high, but still it has caused a lot of investors to sell their oil stocks, which has helped. Overall, it's just helped a little bit. But after September, the federal gas tax will most likely be reinstated, and that'll cause our gas prices and the oil prices to go back up, causing shipping prices to go back up, causing inflation to go back up. And so, but to be determined. But with hopes of a dovish pivot from the Fed now on ice, markets could be in for a bumpy ride going into September. So they can see it, we can see it. Number 4, Eurozone CPI. We don't have to worry so much about that. That'll create some volatility on our part, but most of it will be in the European market, which does affect ours a little bit, but if you want to read it, you can. And then same thing with the China PMI report. These are other things that are, but the main things for us are the top 3 parts of this article. So that kind of concludes our information for looking ahead. But let's take a look at options activity. A lot of the options activity that we like to pull from is from the website called barchart.com. And it's a website that you can utilize. I highly recommend you bookmark it if you haven't already. We can click on the options part of the menu. We can click on most active options. Now, when we're looking at this, like right now during the weekend, it's going to have the last previous trading day. In this case, it would be Friday. So this is Friday's activity right at the closing point. Now, this information does change while the market is open. It's live. You may have to click the refresh button about every 15 minutes and it'll refresh the order that it was in, but the pricing and the changes and everything will changes by the second. So we can see when we're looking at this regularly, we can see that Apple, Tesla, and Amazon are usually on the top 3. And again, when we're, as part of our rules, we always want to follow the money. And so we can see that this is where the money's going. We have a very high amount of volume activity. And again, volume is always the current day's trading, or whether it be buying or selling activity. And so, but when we're looking at the options, we can now see a percentage ratio. We can see where this amount of options is going. We can see that Apple and Tesla, we can see that, for example, Apple, we have 52% betting that the stock's going to go up, whether it be this day or going into the next trading day, which would be Monday, tomorrow morning. So 52% are betting that Apple, or almost in this huge market cap, has a big impact on the entire stock market. So this is like saying that 52% of these investors are betting that going into Monday that the stock market's going to be up, or 47% are betting that the stock market's going to go down. But however, again, thinking in a straddling way, these are majority of people straddling. They're straddling almost 50-50. They're betting both calls and puts going into Monday, hoping that it will continue to be volatile. And that is the strategy that we want to use. That is our rule. Rule number 1, ABS, always be straddling no matter what. Never have a call without a put. Never have a put without a call. That is extremely important. And just, unless it's a lottery play like we talked about, but the majority of our funds, the majority of our investing, we always go heavy on these guys, particularly Apple, because Apple doesn't have Apple has the least amount of time depreciation or time decay compared to anything else. And so that's why the majority of investors always focus on Apple. And a lot of people are always like, Apple only moves 1%, maybe 2%. Well, that 1% or in the options world, that's huge. That could be 20, 30, 40% gain or a loss in the options world. Looking at 1% or almost 4% right there, that's huge. Just like when we were talking about with AMD, where did I put that? Hold on here. Learning. Okay, learning area here. Let me get out of here. So the learning area. Right here. So going over the straddling part again, a call, put. Call as the beta stock goes up, put as the beta stock goes down. AMD was down 6%. A lot of people like doing straddling on semiconductors because it's a little bit more volatile, but again, you may have a little more time depreciation than you would Apple. But like I said, you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So if you have an even amount, 50% on one side, 50% on the other side, this side washes out your loss and puts you ahead. You're probably up, what, 400% in one day just by doing this. And that's why it's imperative that we always straddle no matter what. And that's why we see a lot of that activity right here. But when we're looking at this regularly, we can see what stocks are normally on here and what stocks are not normally on here. And so, but by going down, we can also look for unusual activity, like for example, a NEO. NEO. So what just happened recently with China in the last several days? All of a sudden, we saw the news that that China is going to allow some of our guys to come into their country to do their stock market audits. Because when the Chinese companies release their financial earnings, they're not audited. That means we just have to take their word for it. They, whatever they say, they can't prove it. So if we go in there and we monitor their financial earnings, now we can verify, yeah, okay, they're telling the truth because because basically they're allowing us, they're participating with our regulations, just like all the other countries around the world are. But for some reason, China has been very stubborn. And for whatever reason, they probably think that if we go in there, we're just going to spy on them or whatever. They're just paranoid. And so, but now all of a sudden they said, yeah, they'll let our guys in there to do the auditing and stuff. And so that was huge for the Chinese stocks. In fact, that was really the only thing that was bullish during Friday morning. But there was just too much bearish characteristics that it weighed them down, whether it be Alibaba or NEO or so on. And so, but look at this. We have 82% buying calls, because they know that the Chinese stocks should be very bullish. These NEO and these are so undervalued. These should be twice as much. And so we see 82.5% buying calls on NEO, Alibaba 79% calls. That's higher than any other percentage ratios on this page right here. And so that's huge. And normally these tickers fluctuate around the list. They're usually in the middle or the bottom. But when there's activity, they'll trickle up on top of the list. Bed Bath & Beyond is way down. We can see 63% calls, and it's up 6% on a very, very bearish day. That could also imply some unusual activity. It's kind of flying underneath the radar, and so a lot of people are buying it, and a lot of people have probably bought and they're probably own it for a very high cost, and they're probably buying more to lower their average cost. And so that'll help pump it up too, and so that's always nice. But we can always find things on here that are not normally on here, like 3M. They're not normally on this list. A firm, I think they have earnings coming up. I think they already had earnings. So, but yeah, they're down significantly a lot. But we see a 50-50, so we see some straddling going on there. This is just very, very valuable information just on this page alone. But there's another section to this option area. If we go to the option volume leaders, this will now show all the most highly active individual calls and puts. And so, but it's important to know when we're looking at this, whether it be on a Friday or during the weekend, that we're not looking at something that's expired. And so that's why it's important to look at the DTE, because it's the number of days until this particular option expires. So when we see 0, that means that it's expired. It's useless. It's no longer applies. So we always want to go down to the next one as we're continuing our due diligence. We see that the 3M is dominating the list by a lot. We have 112,000 in options volume for this particular strike price at $200. That is a huge difference. That is weird. So we have a $200 strike price, but we're at a put. That is the bet the stock goes down. So this means we are way in the money for some reason. We can be very, very expensive. Look at that. Each contract is $7,100. That is crazy. What is going on there? However, this option expires in 21 days. Later on this month on Triple Witching Day. Remember? And so, but very unusual amount of open. Well, it has a very high amount of open interest of 305,000. But because of the volume is well below the open interest, and if you're new to the open interest is the total number of open contracts that have been traded but not yet liquidated by offsetting trades. This means total number of contracts that have been purchased but not yet sold yet prior of the current trading day. Because the current trading day is the volume. Open interest is the previous day's activity, combined number of open contracts that have been purchased but not yet sold. So that means, what if this was the total number of open contracts, but all of a sudden they sold that? So this could be selling activity. So it's important to know the difference between these two. Now, if we see the opposite, for example, NEO is currently at $19.92. We have a call strike price at $23, which is not in the money yet. We're below the money. We're $3 away, which would be 15% away. That expires this Friday on September 2nd. We see an open interest, a very, very little amount of 2,100, 2,000 in open interest. That's hardly anything. Now all of a sudden we see a massive amount of volume of 87,000 that exceeds the open interest of the 2,000. So that tells us a highly unusual amount of buying activity. That means that's showing now a massive amount of new interest on this. So this amount of volume going into tomorrow, Monday, August 29th, this volume will merge itself with the current open interest, and it'll keep going. NEO is going to keep going, and there's just going to be more activity. But so far, investors are betting that NEO is going to go up 15% this week until further notice, or at least until, by us knowing or doing our due diligence, we know that Monday, Tuesday, or at least Tuesday, Wednesday should be bullish, and then Thursday, Friday should be bearish. So this could be easily a good plan to ride the wave until Wednesday, sell it, because most likely it'll probably reach $23 by then. NEO can move, quite a bit. It can make some 10% swings at any time. And so, but right now, that this is on our watch list, guys. Next one would be Claire. This is something we've talked about before in the past. CLAR, or we talked about this in our last meeting too. And so, but they're right now at $22.30. We have a couple strike prices that are already in the money. But we're starting to see some interesting activity, a lot of open interest and a lot of volume on these. Apple, we have a $170 strike price for a call, and then Apple also has a $167.50. Oh no, that's expired, so that doesn't count. So out of all these, really the Apple is the only active one The $170 call strike price is the only active one going into the stock market this week, with an open interest of 12,000 and now a volume of 62,000. That's huge, guys. That really exceeds over the open interest, really betting that Apple should be going back to where it was recently. So Tesla, we have going into this week, we have a $300 call strike price for Tesla. With the open interest of 12,000, now the volume of 53,000, and then Apple, we have a put down here, so we could easily be seeing straddling, as we were talking about that in the last page. And when it comes to straddling, there is an area here for straddling activity. There's 4 pages. One says short, one says long. I still recommend look at both. One just may have a shorter expiration, one has a longer. But you'll notice one says strangle and one says straddle. What's the difference, you ask? Well, both of them are essentially the same concept, where you're betting a stock goes up and betting a stock goes down. However, a straddle is the same strike price. So you have the same strike price for your call and your put. The strangle is different strike prices. For example, whatever Apple is, you may have a call strike price that's $5 higher than the share price, and your put may be $5 lower than the share price. Now, I recommend trying to keep your strike price right around the share price or within that vicinity. If you go too far, then you're going to suffer more time depreciation than or double or triple the amount of time depreciation than if you were at the share price or within the money, beyond the share price. And so, but the rule of thumb is always try to be right at the share price, and that's why we mostly focus on straddling. Always try to have the same strike price, or as long as within the vicinity, within a short distance, like 1%. If possible. So, but when we're looking at these 4 pages, we want to look for unusual activity. And the unusual activity would be like multiple of the same thing. Like, for example, the Bed Bath & Beyond. We see 1, 2, 3, 4, 5. We see 5 of them on the front page here. And that dominates pretty much everything else that's on here. I don't really see any more. There's Tilray, there's one, there's I don't see, there's a Google, I just don't see. There's a Bank of America, BAC, there's one there and there, but so far Bed Bath & Beyond is dominating the straddling part of this page. So going into the next trading day, or going to tomorrow, we can see, and that's why we want to look at this before the market closes. That way we can see, again, always follow the money. We can see where the money's going. So Bed Bath & Beyond on that page. Let's check the second page. Second page, looks like we have a couple AMCs on the top. I really want to see more, just like the Bed Bath & Beyond. Let's see. Just kind of start from the top, work your way down. And we're not really seeing multiple of the same thing other than 2 AMCs, but AMC is considered one of those manipulated stocks, which is one of the things we want to try to avoid. Try to avoid manipulation as much as possible. Going to the third page, the short strangle, start from the top, work our way down, try to look for any multiple of the same stocks. Not really seeing multiple of the same stocks, which is okay so far. Bed Bath & Beyond had dominated that first page. Keep going down. Last but not least, we're on the 4th page. A couple more AMCs. AMC depreciates a lot. That's why I don't recommend it. It's heavily manipulated, but it depreciates, which is a straddle killer. Because if you're straddling certain things like that, it can both depreciate both your calls and puts pretty rapidly. You don't want that. Keep going down, looking for any multiple of the same thing. There's a CrowdStrike. We were talking about CrowdStrike with their earnings, but I only see the one there. But it looks like people want to straddle that one. But yeah, not really seeing anything else. And then another very, very important thing to utilize when we're going into when we're looking for volatility and times, even though we've looked at economic reports, we've looked at earnings reports, they all are scheduled to happen. But when it comes to the White House or the president's schedule, that stuff is almost scheduled on a daily basis. So we can't really always look ahead to see what they're doing, because it's created on a daily basis. So, but there is a website. If you go to Google, just type in Biden's schedule, the first page should pop up. It's some BA.se website. Just click on it. It says President Joe Biden's public schedule. These guys have a huge impact on the stock market because most of the time they scare investors. So we want to know, are they scheduled to scare investors? But sometimes they could be scheduled to pump up the market. If they're going to talk about the economy and Ford Motor Companies is going to add 8,000 jobs after they let go 4,000, but building more factories and stuff like that. Investors love that. They get off on that. Oh, we got to pump up Ford now. But that's another thing. We always want to look to see if they mention a company. If they mention a company, all of a sudden Wall Street and the news companies, oh, they mentioned a company, let's make an article, let's pump it up, and all of a sudden you start seeing, looking at the graphs, they start going up. And then you start wondering, how come the stock's going up? Man, I missed it. Well, you couldn't. As long as you're focused on this stuff, you know what's going to happen before it happens, you'll be fine. You'll never miss an opportunity. So but in the last several weeks, these press conferences and stuff have been light because a lot of those guys have been on vacation or home in quarantine with the COVID after getting several vaccines and several booster shots that don't work. But we can see here with the schedule, but when we're looking at this, it's always in the Eastern time. So based on your time zone, you just have to do a little bit of math to figure out what time this is going to happen during your time zone. Now, a lot of times these things could be delayed. It could be delayed 5 minutes. I've seen these delayed an hour, but a lot of times we can find these live events on YouTube or on Facebook or on a news application. However, I usually utilize the YouTube because a lot of times the news companies, they'll post a little thing on there, whether it be a schedule reminder type thing, or a lot of times they'll have the camera on live. They'll watch all the journalists and stuff come in, and they'll sit down and you can kind of hear them and listen to what they're saying before it happens. That way we're ready. We can always have YouTube on in the background too with our phone minimized or whatever. And so, but it's just really, really important. Next to the economic reports, these have an impact on the entire stock market system, not just some of them or a little bit or segments. I'm talking about the entire stock market system. So that's why it's imperative that you get dialed into this stuff and master this, economic reports and earnings, because it's only in your favor. The more you learn, the more that you're going to earn. Now, there's another website when it comes to options that we can utilize if we want to pull the most active individual calls and puts. NASDAQ is a great website to pull a lot of that information. We have, for example, we're looking at Apple. We have the most active calls and puts for Apple, but a lot of this stuff is going to be expired because when NASDAQ upgraded their website, they removed the expiration date on the chart. But if you click on it, it'll go to the next page. It'll tell you whether it's expired or not. So in this case, that particular one is. So you would just have to work your way down to maybe one that's maybe a little bit more valuable, like maybe this $170 call strike price that expires this Friday, September 2nd, and it gives you a lot more data on that. And so, but this is a very, very valuable website, and you can bookmark this link too, because when you bookmark it, the ticker is in the URL address in the top here. I'll highlight it. You just got to replace it with a different ticker, and it'll tell you and show you what the most active individual calls and puts are for that stock option. And even when the market's open and active, all this stuff is, I believe, updated about every 15 minutes. You can always refresh it every 15 minutes and get the most active individual calls and puts for that particular stock option. And so, but yeah, so this is huge. And anybody have any questions or anything they wanted to go over, bring to the table, or anything? Does everything make sense? Good. If no questions, no comments, I'm assuming everything makes sense. Nobody has anything to bring to the table, have anything going on this week, know anything that we haven't mentioned about? You can feel free to unmute your mic. If you are talking, we can't hear you. Anybody got anything? No? Oh, okay. I think we're... D. Lewis, you got anything?
No, I'm good.
No?
Thank you so much.
All right.
I'm trying to everything.
Trying to absorb. I know. Information overload, and that's why we're here. We're available 24/7 in our chat rooms. So, again, this is recorded, so I'll be uploading this to our YouTube channel and our Facebook group, so that way it's always there for your reference, and especially those that have missed it due to having to work on Sundays or other events.
Right.
But yeah, this is very, very valuable information. So yeah, if any questions, keep in touch. We're available 24/7.